Happy Friday, everybody. So you might notice my background has changed. This is my, hopefully you're seeing this the way I am. Anyway, I've had partners tell me that it looks right when for me it looks completely backwards. When I tried to make it look correct for me, it looks backwards for everybody else. So hopefully this shows up correctly. But anyway, as of January 1st, uh, the firm that I own merged with another firm, and we have changed our name to the Armstrong Group PLLC. So that's our official legal name now, tag PLLC. But that's the reason for the background change. Otherwise, everything else is still the same. We're making couple of minor changes to names and branding, and that's really about it. But anyway, this week I wanted to talk about how to read a tax return itself. And so we're going to probably have a three-part series for this. We're going to start off by looking at an 1120S or an S corporation tax return. It looks very similar to a regular corporation tax return, so I'm not going to do both. But small businesses primarily file as either a partnership or an S corporation. So we're just going to look at the S corporation this week. Next week, we'll look at the 1065 partnership tax return, and then we'll go through the main part of a 1040 tax return. So there's a lot of stuff that goes into a 1040, different schedules. And a few years ago, in an effort to try to simplify the Form 1040 itself, they actually ended up making the overall report more complicated because it used to be a 1040 with schedules A, B, C, D, and F. Uh, Now it's a 1040, still a two-page form, and now we have schedules one, two, and three, and schedules A through F. So it ultimately just became more complicated, but we'll get into that when we talk more about the 1040 itself. Today, I'm going to go ahead and share screen, and let's look at and talk about the basic 1120S S corporation tax return and how to read it. Um, Okay, so we're looking at just the PDF of an S corporate tax return, U.S. income tax return for an S corporation. Um, that's kind of a misnomenclature because return implies that you're getting something back, right? Well, an S corporation and a partnership typically don't pay federal taxes. They are what we call pass-through entities. And so this is actually more of an informational report, providing information to the IRS on what the taxable profit was that's going to pass to the members, the shareholders, or the partners. Okay, so the first part of this up here is just your business information. What date was your S Corp election effective? Because it is an election, business name, address, EIN, and the date it was incorporated or LLC was filed. Just some basic, again, informational stuff right here. Is this an initial return? Is this a final return? Did you have a name change, address change, that kind of stuff? So basically everything in this first, one-fourth of the page is just FYI for the IRS. Then we have the income section. So this is where you sign the 8879, which I've had a video talking about that. That gives e-file authorization to your CPA or your whoever's preparing and filing your return for you electronically. And they report this line right here, gross receipts. I think it's line 6. This is what they report on 8879. So basically, you have gross receipts or revenue. We subtract cost of goods sold if you're selling some sort of inventory. So you got inventory, so you got gross profit. And then we have a sell of physical assets. So this would be like you sold a car, you sold a tractor, you sold some sort of equipment. Maybe you sold some, you shouldn't really have real property in a corporation, but if you did and you sold it, that would show up on here. So this is basically capital gains is Form 4797. That shows up there. Other income, this would be like credit card rewards, maybe a few other things go in here, just some miscellaneous stuff. And then you got total income. Then you have a handful of categories here for expenses. And the most of your expenses are going to fall into this other deductions line. But this would be like, as the owner of the S corporation, your W-2 wages are going to go right there. If you have any traditional employees, it goes there. And we've got repairs, bad debts. Most small businesses don't report bad debts because we are a cash basis. Typically, small businesses are cash basis taxpayers, so that usually doesn't show up. It gets buried in the income line up here. Rents, taxes, so this would be like sales tax or property taxes or professional licenses that you have to pay for. Interest, this would be like credit card interest, mortgage interest, a loan interest on a vehicle. Depreciation, that's typically calculated by your tax provider. Depletion, um, that there's a special form for oil and gas depletion. This would be like if you're in a mining industry. Advertising, pension profit sharing, etc., employee benefits, and then energy efficient commercial building deduction. That's kind of your credits type stuff. And then other deductions, that's where pretty much everything else is going to go. Like I said, the majority of your expenses end up in there. These are just the few items that they have line itemed out. Then line 22 here is what's going to pass through to your taxable income on your 1040. So basically, that's what we call your profit and loss, or your income statement gets reported on page one, with line 22 actually being the line everyone cares about because that's where we report your taxable profit that's going to pass to your individual taxes. If for some reason your S corporation owes taxes somehow, there are ways that that can happen. It's all on lines 23 through 28. That's all about taxes itself. Um, Typically, that results from changing from a traditional corporation to an S corporation after you've been operating for several years. There's a few issues with that, and you will continue to pay taxes as a traditional corporation on a handful of things until they are depleted or done. Okay, pretty much all these other pages are FYIs for the IRS. We talk about your accounting method. We talk about hierarchy and, subsidiary ownership, whole bunch of questions that for most entities, these are all no's. Whole bunch of everything on this Schedule B is just FYIs for the IRS, and maybe they will require additional forms to be attached to your tax return. Schedule K is basically just how stuff is getting distributed out to the shareholders because different things have different tax treatment. So, line 22 right here that we talked about, which is your taxable profit, gets duplicated and reported as ordinary business income, page 1, line 22. So it gets reported there. Then you have 4797 gains and capital gains and losses and all sorts of stuff. Basically, anything that has a different tax treatment and how it's going to be reported on the K1 to the shareholders themselves, allocated out based on ownership percentages that gets reported right here in total. So this page is basically the sum of all the K1s added together. Then we have your balance sheet. So again, most of the stuff is just FYI for the IRS. But here we have whatever cash you have as of the year end. For most people, that's going to be 12/31. So that's going to be all the cash in savings accounts, bank accounts, checking accounts, and if you have actual cash on hand or in a till or something, it'd be that cash too. Uh, Most of this stuff is pretty explanatory. We've got accounts receivable. Most people don't have that. If you're a cash basis taxpayer, we back that out. Inventories, U.S. government obligations. That's usually nobody has that unless you specifically are into something where you're working with uh, or you have some taxes due to the U.S. government. Tax exempt securities. Again, those are going to be like most of the stuff I can actually just get netted together. Other current assets, if it's not a tax exempt security, so like basically you have a tax-free bond or something. Other current assets is basically where your catch-all is. Loans to shareholders, mortgage and real estate loans. Again, that should always be zero because S-Corp shouldn't own any real estate. Other investments, if you happen to have a stock portfolio or if you invest, if your S corporation buys other companies, that'd be in there. Then we have your fixed assets, which is what we take depreciation on. Typically, this is a vehicle, maybe some office space, some equipment, stuff like that, furniture and equipment. Depletable assets, mining operations. Land isn't depreciable, so it just has its own line. Intangible assets like goodwill, patents, stuff like that. Amortization, which is just depreciation on intangibles, and then other assets is just again a catch-all. Liabilities, you have your accounts payable, which again should be zero for cash basis taxpayers. Um, I guess up here, this mortgage would be if you're in the business of loaning money out. That's what this one would be. I mean, people owe you money. This one down here, mortgages, is where you owe money. So this one should be zero. And then you have less than a year and more than a year if you want to break it out or if you're required to. Other current liabilities, getting catch all, that's like your credit cards and payroll taxes. Other liabilities here, this would be like, um, so this would be, this line 20 is your long-term debt. So that'd be like if you owe money on a car or a truck or equipment, you have an equipment loan or whatever. Other liabilities is just again a catch-all. Most of your stuff is in mortgages and greater than a year long-term debt, or in other current asset or other current liabilities. And then you have equity, which is capital stock, additional paid-in capital, and retained earnings. That's kind of all your equity stuff. Um, then this page down here is a reconciliation of equity, basically. Uh, and that's the whole form. So, I mean, when you get your tax return, it might be something like 20 to 50 pages. A lot of those things are worksheets where we're showing the calculations and how things are calculated. If you those are where we have additional schedules, just because on the schedule B you answered yes to a certain things. There's a form specifically if you have officer wages, which is an 1125E. If you have depreciation, you're going to have form 4562, and you're probably going to have uh, a depreciation schedule. But most of the stuff that creates your tax return, that 50-page document, is a bunch of supporting schedules that really come to this one page, and this one page is the only thing that really matters. Your profit and loss statement, line 22, saying how much profit you made that's going to then be distributed out to the shareholders to pay on the shareholders' individual taxes. So I hope this video is helpful for anybody as you try to understand how your tax return, uh, what the corporation tax return looks like as you're trying to read it and what actually matters. The only line that really matters is that line 22. Um, and if you want to know how things are getting distributed out, the Schedule K is kind of where like you're going to see, okay, that line 22 income, maybe capital gains and losses, as you can see in here. You really shouldn't have charitable contributions, but they would get reported here, and some other credits and different things. But um, this is where you can see like line item detail of how stuff is getting distributed, with the primary thing, as I've said, being line 22 on page 1. Okay, have a wonderful weekend, and I'll see you next week.